Good morning. Welcome to Market Day Report. I'm Tony St. James. Let's get this new week started right now. And, it kind of reminds me of the Black Eyed Peas song, Get This Party Started. Well, let's get it started with overnight trade in the corn market. And that's where we'll start, as corn futures, again, have been trading lower. And we're maybe find out why. Brian Hoops will join us in just a moment. But in the overnight session, December off 2.25, 411. The March down 2.5 at 428.5. What about the soybean trade? It's lower as well. November 10.04.5 down a penny 3/4 and 2 cents lower if you roll out to July. Now for the wheat, let's look at a couple of contracts here. Chicago, December, 586.25, down 8.5. And the July at 618.25, it's off 8 3/4. Same two contracts for hard red. The December dime lower, 590. Notice we're now below $6 there. And the July at 613.5, it's down a dime as well. Minneapolis will just take the front month December at 626, off 9.5. And the cotton market, just the December contract here, trading 71.98, knocking on the door of 72 cents. It's up 216 points. Well, Brian Hoops, Midwest Market Solutions, joining us again. And what about the Commitment of Traders report? That came out on Friday. What can we glean from that?
Good morning, Tony. Hope everybody had a good weekend. And yeah, I'm glad you asked about that report, because it's almost similar pattern to what we saw for corn in the late April, early May rally timeframe. Remember that time funds were going into the planting season heavily short. They bought back a lot of their short positions, almost back to flat. And at that point in time, we rallied corn 470 to 490, 495 on the December futures. Well, at that time, the rains had delayed our planting a little bit, and that was enough of a reason for them to get out of some of their short positions, giving us that rally. Well, after that, they dropped the market. The funds piled back into the short side over the next 30 to 45 days, and we saw much lower prices. It's a similar pattern right now to what we saw last April, May, where the funds, large trading funds, have been covering their shorts. They're not as deeply short as what they were, about 47,000 contracts as of Friday's report. Now I'm wondering if they don't turn around and start selling this positions once again as we get into harvest. And it looks to be a very large harvest, second largest crop ever in history that we will combine. And that has me concerned here that these prices that we're seeing in this 410 range won't be available the next 30 days. They're going to be much lower prices. The commercials back in April, May, they were long, they sold out, building a net short position. They're getting close to doing that similar pattern here. So it's very eerie, similar patterns. And if history repeats itself, we're going to see 350, 360 corn in the next 30 to 40 days.
Okay, that's Commitment of Traders report, kind of what I teed up for you, but a different commitment, export commitments. When we start looking at corn, 3-year highs there, but disappointing when we're looking at soybeans or cotton.
Right, especially soybean market, where we've got off to such a slow start. We were the second worst exports in the last 19 years. Now, China's been a pretty good buyer recently, and there was another sale this morning to an unknown destination, 132,000 metric tons of soybeans sold. So 2 cargoes. It's probably going to end up being China. In fact, the USDA email headline said China, but the body of the email said it was actually to an unknown destination. So, it's probably going to end up being switched to China. They've been accumulating and buying here recently, narrowing that spread from the lows that we've been at to more of a normal pace. We're still behind normal, but they are doing a much better job. And part of that is because it's been so dry in northern Brazil that there's concerns that maybe we won't have as big yields out of South America for both corn and soybeans than what we had a year ago. So there is some hedging of their bets here going into the planting season in South America.
Okay, hang on. We're going to come back, and the trivia question is, which one of our proteins is seeing growth week over week, month over month, year over year? We'll find out. Brian Hoops will hang around and visit with us as Market Day Report continues in a moment. Welcome back as we get this week started, and we'll hit the end of the week, Friday, after the close, a cattle on feed report. So we're building towards that. How did we end the session on Friday? Well, live cattle futures on Friday settled in mixed territory. October off 37 at 177.65. Dime lower on D's at 178.50. We did see gains in April and June. What about the feeder cattle market on Friday? It was lower across the board. October 239.12 off 62, 40 lower on the January at 230.60. And the hog trade on Friday, it was actually lower. October at 78.45, down 45. December 25 lower, 71.30. Brian Hoops is president, Midwest Market Solutions. I kind of teed this up as our trivia question. What protein market has been trading higher month over month and year over year? And it's the hog market, up 3.3% month over month, 4.46% year over year, but a lower close on Friday.
Yeah, a lot of people I think would probably miss that answer. They didn't expect that the hog market's been trading higher because it doesn't really feel like it. You know, we're trading mostly lower here last week, as you mentioned on Friday. The cash market's having a struggle this year and this summer. We're trading, at these price levels that we're at. We should be moving higher on a seasonal basis, and yet we're very close to taking out last week's or the previous week's lows and turning some of these technical trends lower. Now, the cattle market kind of didn't do much on Friday, but overall for the week, it was a much higher weekly close. I think feeder cattle over $8 better, live cattle a couple dollars stronger, and we did end the Goldman roll on Friday, so that should take some of the selling pressure away from that October contract. Cash outlooks this week are mostly steady at this point. We're looking for, to assess the show list this week, maybe give us a little bit better cash direction. But the feeling is we had that steady to $2 better dress trade last week, which should give us some optimism for cash outlooks this week, especially if producers get busy with field work. Maybe they will have some opportunities with higher cash cattle this week and into the next week as well.
Brian, thanks for joining us this morning, getting the week started. We'll see Brian Hoops again on Wednesday morning.